Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Icino. Welcome, Bob.
Good to be here, Jeff.
Well, Bob, interesting start to the month of December. Is this all the trade tussle flare-up, or is there more underneath the surface?
No, I think it's trade. It didn't help that earnings were negative in terms of earnings growth, but this is all about trade with multiple countries now, not just China.
And I know there's nervousness in the market, but at the same time, we had a pretty wonderful month of November.
Yeah, it's really not drastically lower than the all-time highs. A little bit more than 2.5% down in the last 3 or 4 days. Not dramatic yet, but it has affected volatility.
All right, great point. Let's get this first lightning round. You ready?
I am ready.
Volatility spikes. Well, you hit the nail on the head. We actually saw the VIX. It dipped under 12 for just a moment in time about 3 trading sessions ago, and now back above nearly 17. That's a 40% move in volatility. Pretty sensational.
Yeah, it's a dramatic move, but again, coming off those low levels, it's not that historically high. And you know, in striking options, we like to take advantage of spikes and vols. So the example I want to look at is selling the December week 2 $3,029.50 put spread in the E-mini S&P 500. The selling of this particular put spread allows an investor to collect $232.
No, this makes a lot of sense. And you bring up a great point. You're talking about the elasticity and volatility. When you see that suppression in the volatility, it snaps back. So yes, historically speaking, it's not that high, but it is elevated and allowing a nice amount of option premium to be collected. And this put spread, this trade example you talked about, actually December 13th is the expiration next Friday. And remember, the underlying futures contract in the E-mini S&P 500 was 3084.5. But with at-the-money volatility, we talk about it all the time here on Striking Options. What was it, Bob?
It was about 1512, and again, that is elevated versus recent levels that you mentioned, but not historically.
No, it's a great point. And please remember, these are trade examples, not trade recommendations. Let's move in the second lightning round.
I'm ready.
Gold revived. Well, we did see gold see a little bit of a pop, about a 1% move higher. Is this all due to the trade tensions and people are looking for a safe haven, or was gold looking to move higher by itself?
Well, in my belief, in the short term, it's definitely a re-entry of that flight to safety, flight to quality bid that you see in gold and you see in some of the currencies as well.
Well, it's interesting. As we had a slew of new all-time highs in the equity markets here domestically, we didn't really see gold penetrate or go under 1450. Therefore, I'm a little bit bullish on the precious metal this week, Bob.
Right. The range was compressing while equities were rallying. It wasn't really falling that hard.
And a way to capture a bullish expression here, my trade example, is buying the week 2 15.25-15.50 call spread. This call spread is a debit spread. It's going to cost about $150 to enter into this trade example. It expires on the same Friday as you, Friday the 13th, next Friday, Bob. But it's interesting. If we do see a little bit more of a pullback in equities, you'll see that $1,500 level recovered. Historically speaking, whenever you see the markets go down, you do see that flight to quality, that safe haven trade illuminate.
Right. In futures, when we price this, we're about 1485.20, and the at-the-money volatility was about 1193. Again, not really that elevated.
Yeah, and that's the thing. 1525 is actually not that far away from a percentage basis. So it'll be interesting to see how the month of December really works out here with all the trade tariff conversations, hopefully getting resolved by December 15th.
Yeah, and I really like this trade example in the instance that my selling the put spread isn't a good example.
Oh, great stuff, Bob, as usual. Thanks for joining us on Striking Options. And please tune in every week as we'll continue to strike options.